Hello, guys. Welcome to a late night daily market review. I'm sorry I have to post this quite late today because I just came home. Unfortunately, I was outside since almost 3, 4, 4 a.m., 4:30, 5 a.m., or something like that in the morning. Right now, right now it's my local time is 8 p.m., but in New York it's 11 p.m. So I know it's late, but I'm gonna upload this video regardless because I want to keep this thing daily, so I'm gonna stick to that. So, guys, a couple things I want to mention here. Let me go back to Discord real quick. So when I woke up, I look at the charts real quick, and I saw a setup here. Uh, I was basically short bias pre-market. So here's what I was looking at. This is why I posted this. Let me just explain this briefly. Then I'll go back to the New York session daily chart basically. So here's what I was looking at. So we had a sell side delivery here, which was rejected, right? Then we have a V shape displacement order block here, which was acted and formed a first leg. Market formed a first leg here. Now, once the first leg is completed, you have the dealing range. You know the drill. It pulled back down into the dealing range. This is happening at 7 o'clock. Pulled back down into the dealing range. Again, it took the sell side, formed an order block here, rallied for the second leg or one setup for life high. And here, so the thought process was this: if market wants to stay bullish, okay, the second leg has to break out. All right. And here what we see is, yes, the candle closed above the buy side, but it failed to break out. You don't see a continuation here. Instead, it just came down, formed maybe SMT divergence or whatever. It came down here. There's no wick on this candle dome manipulation. It came down there initially, then bounced, but rejected the buy side one more time and came down to sweep the sell side. So that was the idea. If second legs fails, basically, guys, in a buy model, market is getting into sell model, and a draw on liquidity will be the first leg's low. If it breaks out though, then you have a continuation. Now on the flip side of the things, if the second leg on the sell model fails to displace, that's what I mean by failing. It fails to displace above the buy side or sell side, then market gets into the other side. So in this case, sell model, and targets the first leg high. In this case, that was a sell model though. So let's take a look at the charts real quick. I want to cover this first, and then I'm going to look at this whole insane price action the whole day. So here, 7 o'clock. Okay, right there. Sell side was taken. So here you guys can see the clean lows. Right here, oops, not that one. Right there, it was taken out. Not taken out, but maybe that might be an SMT divergence. I'm not sure. Let's take a look at ES real quick. It could be an SMT. Right about there. Yeah, it's definitely an SMT divergence. Clean lows on Nasdaq is here. Yes, clears that low. There's an SMT divergence there. So sell was taken. Market displaced right after that. It forms an order block here, and the displacement has fair value gaps as well. And the OB was used, I think it was mean threshold though. In hindsight, I can see that obviously. It formed this first leg all the way up to this high, to the low, pulled back down to the range EQ, and delivered the second leg. And the second leg was basically completed. Now here, this is when I started watching, and this is when I woke up and started watching it. The second leg basically failed to displace. You guys can see that here. It never displaced higher, right? And it tested a couple times actually before the dump. So here's what happened. This is what I was thinking going into 8 o'clock, 8:30. I was like, okay, the second leg, because the second leg has failed, the market is in sell model, which means it is going to deliver sell side, right? Here you guys can see it forms a sell side, 3 drives here, pumped one more time, did not engage with the buy side though. It rejected literally at the first leg's high, which is very typical, guys. Very typical. If market fails at the first leg's high after taking it, keep the first leg's high on the chart, because that's where it's gonna reject, and it's gonna be deep retracement. Then it offered literally sell side here. The short-term sell side was offered, and it rejected there. As you guys can see, the bodies closed above. Now I wasn't watching it at this point. The bodies were closing above. It digged down 2-3 times right before 8:30. Okay, this is very important. Right before 8:30, and this was also a divergence with ES. So ES did not engage with the short-term sell side. This is bullish SMT, and right after that, it flipped the SIBI accumulation. This is a trap retest, and 8:30 literally just like rocket, like from there all the way to here 200 points. That's insane, guys. So that was the first thing. If I was watching this live, if this was New York session, this SMT probably would have where I would have said, okay guys, it took sell side short term and the market wants to stop here. Let's flip the coin and let's start looking for buy side delivery. If this was, if this happened during live stream. So it flipped. Oopsie, I didn't mean to do that. So it made the rally here, dig a little more higher, apparently. Now we have this dealing range from SMT low to the high. It came literally down into the discount fair value gap, the upper portion of it, and send it higher. Now you guys can do a couple of things here. You can also trade if you're okay trading 9:30, the opening range, 30-minute opening range. You can take the short to the dealing range EQ, which was 95 points, insane. Or you can take this. It's up to you. Either or is fine if you ask me. Okay, unless, obviously if you're trading the sell side delivery, you have to have some sort of like entry or something like that. If it's not giving you a fair value gap or something like that, you don't have to trade it. Okay, so here's my read though. I'm looking at these highs. The market was accumulating here. Okay, then it lost the SIBI. BC. A retest. That's also range equilibrium on the short term. Rejecting bodies. That's the confirmation. You guys can feel maybe like third candle or something like that, because the bodies are respecting range EQ. This is the stop loss. You're targeting sell side and range EQ. As it breaks down, form one more fair value gap. There might be an SMT. I need to look at ES. I don't know. I did not watch price today at all. Yep, there is an SMT divergence there as well, right before the trap. And then there is SMT. Nope. So it used the SIBI here to dig down into the range equilibrium, discount fair value gap, and here basically V-shape reversal. In this V-shape, you guys can do a couple things. Okay, some call it aggressive, some call it fine, but like, if you want to do this, guys, I have to warn you, if you want to do this, so this is the second stage, basically one setup for life, right? Comes down into the dealing range EQ or discount, rallies towards the first leg's high, and as you guys can see the difference, it broke out. There is a displacement. So the difference here between this high, the second leg delivery, and this second leg delivery, that's exactly what I mean. Look at this one, breaking out, forming a fair value gap literally at the buy side, and then look at this, it's just wicking, and the bodies are closing below. Okay, so this means second leg is going to reach higher targets. It's not going to go for sell side. It's not going to curl down. And when it comes to trade executing in this, there are literally a couple things you can do. Okay, I gotta be honest with you. Now here, this sell side rejection rally, if you have a bullish bias though, okay, if you don't have a bias, you cannot do this. Sell side delivery. Because of that sell side delivery, this becomes a bullish OB. Again, you cannot execute this, or you should not execute this OB unless you have established a bias. If you haven't, you're gambling. Okay, that's the first entry. That's what I call aggressive entry, but it is doable. And secondly, digs up. There is IFED here. Now at the time, obviously you do not know whether this is going to end up being an IFED or not. So you can wait for one candle to trade it into a fair value gap. If it's an IFED, it is not going to violate the IFED. So here, trade it down into the fair value gap, closed outside, right? That's an IFED. And the next candle, look at the body. There's no wick there, right? So it comes down there for manipulation. That could be the long. And I mean, you can use the IFED low, which will be very, I mean, in this market, volatile. Not realistic, but it is doable, because IFED shouldn't fail anyways. If it fails, it's going to retrace all the way down here, somewhere here, maybe the BPR or something. Okay, so you can use the IFED low, or you can use the fair value gap itself. So your stop loss will be somewhere below that fair value gap, and you target the short-term buy side or second leg buy side. The rest will be runners. Okay, that's the first thing. So let's keep reading this down. So this is the first one set up for live delivery, basically. Let's keep reading this. I love this price action. It looks nice. So it obviously rallied. Now you have a new leg. Okay, now you have a bigger here, new leg, this one. Now in that leg, what you need to look at is whether there is an SMT divergence at these lows or not, because if there is an SMT divergence, that low will be the new dealing range. Okay, let's take a look at it. Yes, so it ran up, no divergence, no divergence, no divergence here. There is a divergence there, right there. You can use that low to the high, dealing range EQ, buy side delivery, lower time frame, second leg. Then here, let's see what happened there. There should be a bearish divergence, I think. Yeah, there is a bearish divergence here with equals, I guess. Oh no, it's a higher low, higher high, and a higher low on NASDAQ, which means it's going for the sell side. Now in this case, a couple things could happen. All right, I have to annotate this. We have this dealing range, right? Market could use that bearish SMT to go down to the dealing range EQ and rally, form a buy model, complete the sell, to complete the second leg, right? Here in this case, it did not do it. Okay, and let's read that. Let's see why it didn't do it. Because guys, here's the thing: if market is rallying from premium, that indicates strength, period. And if market is distributing from this without touching premium, that indicates weakness. Okay, so if market is dumping from a discount, that indicates weakness. So here, what we can do is, so first things first, sell side is taken out. Okay, the bodies are respecting the sell side. Same deal on ES. There's no divergence, but there is accumulation with a manipulation, right? So here it flipped the fair value gap. Now you have trapped shorts. One thing, okay, that could be the long entry, and if you draw in time, it came down there. There is a reason for that, because this is the first leg's range EQ. All right, that's the first thing. Second thing, what you can do is, because there is a sweep of sell side here, once it displaces higher, this becomes the OB. Okay, this whole candle, not just the body but the candle itself. Let me annotate that here. This becomes the OB. If you have a bias, you can enter in that OB as well. If you don't have a bias, I do not recommend executing here. Okay, so it delivers buy side here. Now we have a new leg, which is this one. right here. This is the dealing range. Market broke down, formed a trap here, used the trap to came down into deep discount. Why is it going for deep discount though? Okay, there's a reason, guys. Okay, there's always a reason in the market. Look at this low. No manipulation. No manipulation here as well. I mean, it dig down one time, that's enough. Here though, no manipulation. Where does it go? Right there. Okay, that's the reason of the deep discount. So it came down there. Same deal. Kind of V-shaped reversal. I'm not sure if there was a bullish SMT there though. Let's take a look at it. That's also SMT divergence. That's beautiful. This one would probably be my long entry. I love this one. Then displaces with the SMT right away. Breakaway gap here because of the OB, which indicates strength, and rallies. Alright. So here now we have a new dealing range from SMT lows all the way to the high. Why this high? Because before this high there is no displacement. That's why you need to, so if you're watching it, as you're watching it live, you can say, yeah, maybe this high, then maybe this high, maybe this high, but there's no displacement in those highs. Here there's the displacement. So once it displaces, now you have a high. Okay, that's the simplest way to put it down. I know some folks are confused about this, and this is the simplest way to do it. Unless there's a displacement, you don't have a high for a dealing range or a low for a dealing range. Okay, or it has to be a divergence. There has to be a divergence. So here let's take a look at it. No divergence there. No, there is a divergence here, right there. Now you can also trade this, by the way. There's nothing wrong with this. Divergence, breakdown. The first fair value gap after a divergence is short. There's multiple fair value gaps. Now when there's a multiple fair value gap, you need to look at the dealing range. Basically, do not short in discount, short in premium. Comes up there. You can short the range EQ if you want to. And what's gonna be your target? So your target will be here. Let's say you short the premium or the range EQ there. Your stop loss will be above the fair value gap high. You're targeting the sell side here, SMT low. Now you can do a couple things. You have to do this, guys. Oops, not that tool. Hold on. You have to take partial at the range EQ. Okay, that is unquestionable, especially in this market. This is 68 point, guys. That's huge. That's huge for a first target. This market is on coke, I'll tell you that. So your second target and main target will be obviously the sell side, but it doesn't have to go there, because if it rejects at the range EQ, it's going down. So here, range EQ, premium fair value gap broke down. Now you have a new short-term range. Premium fair value gap, let me clean this. Premium fair value gap broke down. Now price is at range equilibrium. Right, that's your first partial. You can trade this. There's nothing wrong with this, okay? Or if you have a bullish bias, this is your second leg. This is your one setup for life. Range EQ, one setup for life, clean highs. You wait for a reaction. Market comes down into the range EQ. This is the OB. Rallies, failed here. But that failure formed what? It formed, I think, SMT. That should be an SMT divergence. Otherwise, it wouldn't have failed. Yeah, that is an SMT divergence, which sends the price to where? To deep discount, to sell side. Now, once that sell side was taken out, it dig down one more time here. Displacement. Now you have an order block. Same deal. If you have a bullish bias, you can long the OB. Where does it go? Let me zoom out a little bit. Where does it want to go? First of all, you have these highs and this high as your one setup for life. So let's read that order flow. Digs down, OB, rallied, took out these highs here and kind of failed there. Let's see if that's a divergence. Should be a divergence. There you go. That's a divergence. What is it gonna do? It's gonna either take the price down to the short-term low, I mean intermediate term low actually, or the short-term low, which is here. It does that. That is also first leg's range EQ. That's a long, and last probably 5 minutes, is it? Yeah, 2 minutes, not even 5. It delivers the ones that are for life. This is the higher time frame dealing range, lower time frame dealing range. Boom. So pretty interesting day. I like it. I like the PA. The price action looks very good, very clean, massive ranges. So it's not, you know, ideal environment for trading minis, but micros can yield huge here, guys. Like if I take a look at this here, for example, let's say you long the OB because you have established the bullish bias, right? From here to there, 116 points, which is like with 5 micros, that's more than $1,000. Let's say you didn't establish it, but you wanted to wait for this rally into the first legs, short-term first legs low discount. You take that fair value gap, for example, from there to high, 98 points. Still massive, guys. In 3 minutes, massive. So what a good day. I'm actually ashamed of missing this day. I love Thursdays. I think Thursdays, historically speaking, are my best days. I love trading Thursdays. But yeah. Anyways, guys, hope you find this insightful. I'll be live streaming tomorrow, so I'll see you guys tomorrow. Oh, also, I forgot to mention one more thing. So before I posted my short idea, I missed this information. So here, this is the hourly chart. Okay, I saw this later. The sell side was taken here, which was a rejection, rallied. Now you have an hourly first leg, hourly accumulation, comes down into range EQ, bodies are respecting, you know, and this becomes the second leg. I did not see this when I woke up, which is fine because it was like 3 a.m. in the morning from my time. That's what it is, but this is clean. I think this sell side sweep tells the narrative, because afterwards it's a displacement, range EQ retest, bodies are respecting, boom, it basically delivers buy side here. So the second leg on the hourly is completed and it did not fail, thus the New York session was bullish. Alright, so I hope you guys find this insightful. I'll talk to you tomorrow. Have a good one.